When it comes to managing your own portfolio, the first thing I always tell students that I work with is to have a strategy. Understand how a specific stock fits into your strategy. There may be specific stocks out there that folks are talking about that may be too risky for your portfolio. They may be too conservative for your portfolio, and they might not help you get towards your own goal. Invest with purpose, invest with a plan. The largest positions within your portfolio should be a good representation of the strategy, the type of investor that you are. And in today's video, we're going to talk about a stock that I am uber bullish on. This is a stock that I'm going to be putting $100,000 on an investment in. So I better be bullish on it. And it's already a sizable position within my portfolio. So make sure you stay tuned throughout the entirety of this video. And before we jump in, do me a huge favor. Just simply click that like button down below. Show your appreciation. Subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, you can go to fool.com/Mark and check out their 10 best stocks to buy right now, completely free. All right, let's jump straight into this video. And I'm not going to drag out the stock that I'm talking about. I'm going to let you know right out of the gate here. But make sure you do stay tuned because you're going to see how I lay out my case on why I am so bullish on this particular stock. And the stock we're going to be talking about here today is going to be none other than Amazon, stock ticker AMZN. So let's dive in a little more to Amazon. As we can see, the company has a market cap of $2.5 trillion, making it one of the largest companies in the S&P 500 today. Over the past 12 months, shares are up 26%. Year to date, though, only up 6%. And when we broaden it out over the past 5 years, Amazon's only up 52%. When it comes to the Mag 7, made up of Nvidia, Apple, Meta, Tesla, Microsoft, Alphabet, and Amazon, Amazon is sitting towards the bottom of the pack, only outperforming Microsoft and Apple over the past 12 months. But when we zoom out even further to that 5-year chart, we can see that Amazon is actually the biggest laggard of the group, increasing roughly 50% over the past 5 years. So why is now the time to invest in Amazon? Why am I bullish on this particular company? Well, part of it is due in part that it is a diversified company. They're not a narrow focus company with just one major product or service. The problem with those types of companies is if it falters, there's nothing to pick it up. But when Amazon has one segment falter, it has plenty of other segments that can pick up the slack. For Amazon, their primary segments include the likes of online e-commerce sales, third-party sales services, AWS, and advertising. They have other smaller segments as well, but these are the largest segments. And for your information, all of the charts that we'll be looking at here today all come from Fiscal AI. This is an exclusive resource that I use to both analyze stocks, look at earnings report, and go through valuation. It is a powerful tool, and I definitely want you to check it out because right now they're giving away a 2-week free trial if you use my link down in the description below, and you could also get yourself 15% off any of their paid subscriptions at the end of that trial. So taking a look back here at Fiscal AI, we can see a wide majority of the company's sales are from North America, which speaks to the growth opportunity they have for international expansion. Now let's dive into a few areas that I'm ultra upbeat on, that I think have huge amounts of growth, but they're doing it in an efficient manner. And the first one is going to be AWS. It is a juggernaut in the cloud space. Looking at this Fiscal AI chart that I've created, we can see that AWS revenue and AWS operating income both moving higher and currently sitting at record highs. Okay, that's great. Now in this next chart though, I created a custom metric to calculate the operating margin for the AWS segment in particular. And what we see is the fact that AWS margin pre-pandemic was at 26%. Today that margin is pushing 37%. So it's great to see this particular segment continue to grow revenues, continue to grow its operating income. But not only are they growing, they're growing at a more efficient manner, meaning there's more money left at the end of the day for the business and its investors. The thing to think about when it comes to technology is everything is moving to the cloud. No longer are we really using flash drives, or those of you that remember floppy disks. Everything now is saved on the cloud. There's plenty of growth moving forward for AWS and the cloud segment in particular. The second area I want to focus on when it comes to Amazon is advertising, something that I don't think gets talked about enough. And I know it's not one of the juggernauts of Amazon yet, but it's growing at a fast pace and it's a very high margin business. Here's a look at the advertising revenue for Amazon since 2019, and the growth continues to climb, and it sends this segment to new heights. Amazon is now the third largest advertiser, trailing the likes of Meta, who's generated $174 billion in ad sales, and then the behemoth that is Alphabet or Google, who has over $200 billion in advertising revenues of their own. Although the other two are larger, Amazon's ad revenue has been growing slightly faster than those two. Tons of growth, high margin, and plenty of penetration to close the gap on the two leaders that are Meta and Alphabet. Now let's take a closer look at valuation. Looking here at this Fiscal AI chart, we can see that the forward PE of the stock dating back over the past few years, and that dotted line represents the average over that period, which is currently around 39 times. Today, you can pick up shares at a forward PE multiple of around 34 times, so you're getting a slight discount. Now turning our attention to EBITDA, which is a metric I really like to look at for this company in particular. As you can see from this chart, this is a company generating more and more EBITDA than it ever has before. And for those of you unaware of what EBITDA is, it stands for earnings before interest, taxes, depreciation, and amortization. The easiest way to think about it is an enhanced version of operating income. So what we've seen from this chart is not only is the company growing revenues, not only is the company growing operating margins, they're growing and doing it in a more efficient manner. So when we look back here at valuations, we can take a look at the forward EV to EBITDA in particular. We can see the company is not yet getting the credit they deserve for this. EBITDA is growing at a faster pace than the stock price, making the stock even cheaper based on this multiple. Right now, the forward EV to EBITDA is just 14.1 times, which is well below the company's 5-year average of close to 16.5 times. I could scan out over the past decade, and you can see that EV to EBITDA for this amazing company is around one of the lowest levels right now that you have ever been able to purchase the company's stock at. So do we just run out and buy the stock? Well, you absolutely could, because the valuation isn't terrible by any means. But given the fact that this is already a sizable position within my portfolio, I'm going to take another route. I'm going to utilize stock options, something that I do on a regular basis to generate income, but also it gives me the opportunity to purchase stocks that I want to buy at a potential price that I want to buy them at. And if you're interested in following all of my option trades, then become a member to the Stock Investor's Edge. We have an Options Edge subscription where you can track, get trade alerts anytime I enter or exit, and also get our weekly recaps. Check out the link down in the description below. So when it comes to Amazon stock right now, it's trading right around $235 per share. And again, already a sizable position within my portfolio. My holding right now is up over 50%. So although I could nibble at today's stock price, I would love to purchase a ton of this stock at $200 per share. And why at that level, you might ask? Well, at $200 per share, that would put the forward PE multiple at just 26 times next year's earnings, which I believe would be a steal. And it would give shares a PEG ratio around 1.5. So instead of buying shares outright at $235, I'm going to sell that put option with a strike price of $200 per share, as I mentioned. And I'm going to go out in terms of expiration to mid-November, November 21st, 2025. Here's a look at what that option is selling for right now at $2.15 per contract, meaning I would collect $215 per contract that I'm selling, and I'm going to sell 5 of these contracts. That will earn me over $1,000 in premium immediately into my Fidelity account. But I'm also on the hook to potentially have to buy 100 shares per contract at a strike price of $200 per share. So if we were to do the math, by selling 5 options, that equates to 500 shares of Amazon at a $200 per share price, which would equate to $100,000 worth of Amazon that I would be purchasing. Now, if you're new to options, definitely don't just run out and copy this trade, because it's a lot of money that I'm backing it up with. Maybe start with 1, or maybe do it with a lower priced stock. But again, join us over at the Options Edge Plus, where we break down all of our trades. Why are we getting into them? When are we getting into them? When do we exit them? So that you can track all of the stuff that we're doing over there. So this here is a little bit different than a video that we've done in the past. Let me know, what are your thoughts? Do you want to see more videos like this where we go into and dive a little bit deeper into one single stock and then give you an option play on the back end of it? Let me know down in the comment section. If you haven't done so, if you found any value from this stock, then please show your appreciation for the content by just simply, it takes 1 second, clicking that like button down below. I truly appreciate it. It really helps with the growth of the channel, and make sure you're subscribed so you're notified anytime we drop new content. Thanks again for watching, and we'll see you in the next one. Take care.